Well, today I have to put on the Bulls hat because the Bulls have showed up to the market. Let's get to it. Yo, welcome to The Long and Short. Maestro here. Thanks for tuning in. Every day on this channel, we try to make you a better crypto trader by showing you price action trading techniques from a long and short-term perspective so that you don't get wrecked in this market. We also talk about news, give tutorials. We're going to start doing reactions to crypto memes. Lots of content coming on this channel. So if you're interested in learning more about crypto, reacting to the market with us, please go ahead, hit the like and subscribe button, the bell notification, all of that good stuff that people ask you to do so that you can stay aware when we post new content. We have a lot more coming soon. Thanks to all of the new subscribers. We appreciate you guys. Salute. You are the OGs. We're still under 100 subscribers. So we're trying to climb to that number as fast as possible so that we can keep delivering and building the algorithm up to deliver this content to folks on YouTube. All right. So thanks to everybody for joining. Let's go ahead and dive right into the news because there's a lot to cover today. All right. Bitcoin had an epic bounce this morning. 8 a.m. hour, price fell. 9 a.m. hour, price bounced like crazy. Okay. So we're going to take a look at this on the charts. The inflation numbers came out, which in a way did sort of project the price into lower areas. But I really think that was sort of algorithms just kicking price into gear right before the New York hour. OK, and we'll show you on the charts where there were essentially grabs of liquidity that set the price up to push higher. OK, so these are the things that we're looking for when we're bullish. All right. But basically $1,800 in losses today got ate right up. OK, so it was essentially a bear trap set this morning. And we told you yesterday, all of the pressure is going to be coming from the downside. The largest speculators are here. The bulls are here, guys. Okay, so we need to be aware of how that's going to move price for the rest of this month going into the FOMC, because I really think that the interest rates are going to go up. And there's a number of different reasons. So again, interest rates going up, okay, because inflation is going up. All right. 7.5% is more than what they actually anticipated. So let's dive into this news very quickly here. Bitcoin fell immediately on the latest U.S. Consumer Price Index CPI data on February 10th in a surprise move that deflated bulls. It didn't deflate us. We knew that any pushes down here, guys, right, would essentially get eaten up by larger speculators. They are net long when it comes to futures. So we're thinking that they want to see the price continue to push higher so that they can fulfill those contracts. So what do? They'll come in and buy the market up to push the prices up to those levels. Again, in anticipation of what's going to happen with the FOMC. But what this shows us is that Bitcoin is the hedge against inflation that people were talking about. Okay, so they thought that inflation was going to go up to maybe 7.3%. It went up to 7.5%, higher than they expected. Okay, this should impact things like Bitcoin. For whatever reason, people thought that it would impact it negatively. Okay, but if Bitcoin is being pinned and marketed as the hedge against inflation, similar to gold, okay, just digital form of it, then why would it go down if the inflation numbers go up? So to me, that's a dumb trade to take, but this is the way that the market will try to set you up. Okay. Now, here's the thing. Federal Reserve may now have the impetus to begin interest rate hikes sooner. The reason why is because the employment numbers are going up. People are going back to work. Inflation keeps rising higher than what they anticipated. It gives them all the reasons they need. Remember what we said earlier this month. We have to watch the factors that are going to increase the inflation rate. Okay, if they are increasing the inflation rate, like employment, you know, the inflation rate itself, consumer price index, all of these different variables, that will affect what the Fed does. And once it does start to show itself like it's showing here in this article, you can anticipate that the Fed are going to raise the rates. Okay, so there's a likelihood that they're going to raise those up in March. And then the Wolf of Wall Street's Scott Melker actually had a pretty good tweet today. He said, funny, I thought Bitcoin was supposed to go up whenever they admit that inflation is bad. But instead, people dump it because they're afraid the Fed will actually try to deal with inflation, proving once again that humans are dumb AF, right? The Fed isn't going to come out today and deal with inflation, right? So it just shows you how the market is so sort of anticipatory of what's going to happen with the FOMC that any news around what could potentially raise those rates may make people want to sell. But again, I don't think that this was a human reaction. The market wasn't even open in New York. This was an algorithm play in a setup to get New York to trade a certain way. So as soon as New York opened, all of the bears saw that downwards price action. They read the news. They say, yep, here we go. Time to slide. And then they got swept right up, okay, on a liquidity run. So we're going to show you how this actually happened in the market on the price chart and why those guys just got played out today, which was pretty funny to see. Okay, official inflation currently has its biggest gap over short-term interest rates since 1951. She noted in alongside this chart here. So what they're saying is that basically people aren't making any more money. Okay, the value of the dollar isn't going up, but the prices are going up. Okay, the inflation, the consumer price index, people are just paying a lot more for stuff right now, but they're not getting raises at work. And so that right there will affect the economy in a negative way. The Fed has to try to control this. All right. And this was the kicker. No sooner had Wall Street trading begun on February 10th, did Bitcoin not only reverse its losses, but put in a higher high of nearly 45.4. Okay, but it got sat right down in a very similar resistance level as it had been trading in before. Okay, so a previous high sort of set price right back down. Okay, a Bitcoin uptrend in the face of macro uncertainty would be quite powerful, shifts the narratives from TradeFi's court with BTC being a risk-on asset to purely a story of global adoption and ensuing game theory. Have to wonder how many macro bros have offloaded inventory by now, says Will Clemente. And you have to wonder that, right? How many people actually started selling short once they saw Bitcoin push up? You know, it's a good question because the bears did still have control at a certain point in time. You saw a lot of the smaller speculators swinging short. And so, yeah, there's a case to be made there, right? HODL, folks, HODL. We always say that's your best guess when it comes to this market. Let's also talk about a couple of things when it comes to Binance. Binance invests $200 million in Forbes to boost consumer knowledge on Bitcoin. This right here will drive adoption. Okay, now I'm not going to read this entire article because we want to get through the video pretty quick today. But basically what Binance is doing is they're teaming up with Forbes. They're putting people on the Forbes board, you know, with this partnership so that they can continue to educate folks on crypto. Now, you have some institutional folks who aren't involved in crypto at all that read Forbes and look at them for information, you know, influence, etc. So Forbes teaming up with Binance for education and bringing people more into the fold of crypto is a very good thing, very bullish thing. The more awareness you have, the more people come in, the better adoption you get. And all we need are sort of safer avenues for these older folks that have less risk averse attitudes, right? They don't want to take risk. They want to get into crypto, but they want to do it in the safest way possible. So hopefully Forbes, Binance, they're going to form and merge so that they can start to give people information on how to do this so that the older folk can become a little bit more comfortable with how they invest in crypto. Okay, now here's a story that I think we need to pay attention to because I feel a certain way about paying for anything with crypto. And I want to start this off just by asking a very basic, simple question to everyone that's watching this right now. Would you sell your house for a car? Would you sell your house for, let's say, a boat? Would you sell your house for a pair of sneakers? Would you sell your house for any depreciating asset on the market whatsoever? Okay. You understand real estate, okay? If you own a house, you own an appreciating asset, especially if, for example, you fix your house up, right? You remodel the basement, you redo the kitchen, bathroom, whatever it may be, okay? That's something that you can essentially add more value to over time. Cars, as soon as you drive them off the lot, depreciate in value. Tire gets a little rock in it, depreciates in value, right? So this is the thing that you want to pay attention to when it comes to crypto as well. Now, all of these different institutions and companies, businesses, whatever, they're trying to figure out a way to take your Bitcoin, take your Dogecoin, take whatever it is, whatever crypto you want to buy something with, we'll take that, okay? Because we understand the greater game here and we'll boost the price. We can boost prices whenever they want. They can buy more crypto at millions of dollars and take at a time. You can't as an investor. And so what I want people to understand when it comes down to this, and we're not even going to go through this article, I just think there's a basic understanding that folks need to start to get through their minds. Anytime you buy anything with Bitcoin, Ethereum, Dogecoin, or any other crypto for retail return on your value, you are losing. You are buying something with an appreciating asset or something that should appreciate in value over time versus something like a movie ticket that you will throw away as soon as it's done. Okay. So always go back to the situation of the man who bought 10,000 Bitcoin worth of pizza. Always go back to that example and apply that to whenever you see, advertisements about being able to tap and pay with crypto. We should reject this in a certain way. Now, not for all cryptos. I understand that there are some cryptos that, we are looking for a way to integrate crypto into payment systems. But for something like Bitcoin, why would you ever pay for something with Bitcoin? That to me is just not a smart idea, because whatever you pay for it today, 10 years from now, you've paid the premium on that, believe me, and you will feel that, just like the guy who paid 10,000 Bitcoin for a pizza. You will feel that. All right. So don't let these companies fool you into thinking that this is something that we need to do. Don't let these companies fool you into thinking that this is technology that needs to be implemented. Don't let these companies fool you out of your Bitcoin, your Ethereum, your Dogecoin, or whatever else they want to hodl for the long term. As long as it's not in your wallet and it's in their wallet, they've achieved the objective. It's just like them saying, hey, you're going to pay me $10 for this right now, but guess what you really paid for this, And it's different than if you're paying for it with regular fiat currency, right? It's way different, guys. So let's make this an understanding in your mind that this is not a good thing for you, the investors. For companies and businesses, perfect, right? But to me, it's just an underhanded way for them to dig in your pockets just a little bit more, right? Like they're not already taking all of your money for everything you want to buy from them. All right, so just a word of advice. Let's go ahead and dive into the Crypto Fear and Greed Index. Currently, right now, trading at 50 for the Crypto Fear and Greed Index, up from yesterday's neutral point of 54. I think that drop this morning may have scared a few folks, or at least people were starting to see, okay, let's neutralize a little bit. Let's get less greedy, because this market can definitely turn around on us in a second. Some people saw that this morning, but the market bounced right back. So we're going to take a look at all of this on the charts. But right now, the sentiment is essentially neutral, which is what I think is a good place for the market when it comes down to it. All right. Taking a look at Bitcoin futures, okay? Price did jump over this 13 EMA and is starting to separate itself a bit, right? So we like to call this stacking, right? Price starts to move away from this 13 EMA. This is what we like to see, just like it did here. But you see, this move was a lot more aggressive, okay? Now, do I think that you will get a nice, really hard push to keep going? You could, but there's a lot of uncertainty in the market. And right now, people aren't really trading, the way that they normally would if there wasn't this much uncertainty in the market. So we have to be aware of that. But right now, CME futures gap sitting somewhere around 41,000. We need to be aware of that for any bearish cases, okay? But right now, things looking very bullish. Open interest is up, volume is up, okay? So this is what we want to see in the market. Also, when it comes to your commitment to traders, your larger speculators and your retail, your small speculators are above the zero line, commercials below the zero line. Anytime you see this alignment, this is bullish for the market. So any downwards action is essentially just a retracement or another buying opportunity for larger institutions to come in. Just like when price fell this morning, institutions woke up and said, algorithm, go, start buying now. That's all that happened. Algorithm pushed the price down, take out liquidity, flip the price. That's what's happening. And when you see the smaller and larger speculators on the same side of the market, and the commercial swing opposite of that, this is all bullish. We can confirm this also with the Eldoret. Bulls continuing to push above the zero line. The harder they push and the more that the bears follow, the more bullish activity you're going to see. So as long as the bears remain above this, okay, look at the previous 4 days, 5 days, working days, like, not Saturday and Sunday. Look at the working days, okay, and how price has moved over those days. Very bullish, okay. Price took over here. Past few days have been bullish. Very similar to what happened here, okay, in this area. And if you scroll up, you see this is where the bullish activity came from. So as long as these things are aligning on the chart and the money flow index is showing me that price is continuing to see elevated levels because more liquidity is coming in, this is all bullish. Accumulation through the roof, all bullish, okay? So these are the things that we're seeing in the market just for futures, okay? The news, inflation, didn't hold Bitcoin down, it pumped it up. So all of this stuff is very bullish, very good news for Bitcoin, cryptocurrency as a whole. But if you look at the charts today, it could give you a different story. Okay. So if you take a look at the total crypto market cap, you're actually down 0.27 today. Okay. Not a bad thing though, because we're staying elevated right above the $1.876 trillion mark, which is what we say is sort of our dividing line between a bullish and a bearish market. All right. So as long as we're above this level, there's money here to play with. Okay. Now we pushed up out of here pretty aggressively. I want to see if we can keep going, continue to stay in this strong area. Okay. As long as there's money in this market, you will see elevated prices coming in. All right. If we do dip back down into this weak area, it's not the end of the world, but we are anticipating that prices may kind of just ink their way up a little bit into the FOMC, which is what you're seeing here on these blue lines. Once we reach the FOMC, things could turn a little bit darker if they do raise the rates. Right now, it's still a possibility. It's nothing for certain. This is still an assumption, but I'm thinking anywhere from 25 basis points to 50 basis points may be what the Fed goes for. All right, so we're going to watch this very closely. Let's take a look at the Bitcoin 1 hour chart to see where the scalping plays are and start to dissect the move that happened this morning to see how to play this going forward. All right, Bitcoin 1 hour chart. Let's dive in for the scalping and swing opportunity. So we see that price is still sort of swinging itself within a range, but it's sort of defining new higher levels of the range. But again, these are essentially equal highs that price set here before it started to come back down. Okay. Also, when we look at the move this morning, okay, we can see that price did come down. And even though this is a green candle, this last little wick here, let's zoom in a little bit, that wick right there, okay, snatched a lot of liquidity to the downside, which gave price what? The rocket fuel to push higher. So we follow two main rules when it comes to price action, okay? Where is the liquidity being ran or grabbed, okay? And where are the imbalances in price that the market wants to fill in, all right? So there weren't really any imbalances. And as you can see, price action just sort of staircased its way up over the past few hours, overnight. Okay, so this is pretty much, I go off for Eastern Standard Time. So this is right at 12, okay, 12 a.m. Price just sort of staircased its way up. Okay, so for any traders that were trading overnight or woke up in London and saw this happening, what they were probably doing is taking long positions. Okay, so those long positions started to come in. Some people put trailing stop losses here. Some people set stops here, 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 right? And if they thought they were smart, they probably set them there. Okay, here's what happened to all of those folks. 8 a.m. hour comes in, New York goes up, pushes right down. Okay, now this push down was a big red candle that did what? Bring in a lot of short plays. Okay, so the shorts continued. Hour cuts over all the way down here. Now this snatches up all of the liquidity. By the time the algorithm's done grabbing the liquidity, it allows price to go the other way. It's like they stop selling. All of the selling just stops. Okay, and the other algorithms kick in and say, okay, now it's time to buy. We grabbed all of this liquidity. Here's the money we're going to buy with. Let's go. Right. So all of this starts to get bought up at this point. Boom. Price drops, takes liquidity, pushes higher. Everybody that was going short, seeing this big red candle, thinking that they were good, within the next couple of hours, takes them out. So think about this in the time perspective, right? 8 a.m., you get in the short, you go eat breakfast, you come back to the chart. By 9:30, you're wrecked. Okay, this is how fast the market moves. Okay, so just understand that this is what it's doing to traders. Whipsawing, snatching the top, snatching the bottom. Okay, so you can actually play this if you look at it from a longer term perspective. If you're trying to play this range, you may be getting whipsawed. But there's some areas here that if we were to draw Fibonacci on this first real extension move out of the order block, you'll see where the alignments start to come in. All right, so let's take a Fibonacci. Let's draw one right from the bottom of these candles. And what we want to do is align this right to the top of the, we can go to the highest extension, but we're talking about previous price action. So we'll use this one here because this one was just created. Okay, so to be fair, we want to look at what price gave us in order to take these plays. Okay, not what it just did. We'll look at this in a different perspective, okay, in a second. But for the most part, I drew my Fibonacci from the body of the candles to the top on this extension move out of the order block. Okay, now price traded sideways and then jumped itself out of this area, which is why I'm not necessarily taking this area into account. I could, but you're not really going to reach the areas of potential longs if you do it that way. So what we like to do is take it out of the order block, because now price is being elevated out of this area. This is really the area that counts, not inside of the order block, if you guys get what I'm saying. Okay, So boom, price jumps out of that, okay? We go from the bottom to the top of this move. Look at how price comes right back down into the golden zone areas for opportunities. The first one dropped into, let's say, the 80% level Fibonacci retracement, okay? Bodies of the candles did not close below this. If you were long here, you won, okay? Now, you are getting in and out of these plays. These aren't long-term plays. These are scalp plays, okay? But entry here, you took profit. Entry here at the 62% level, you had two of them to take profit, okay? Another dip down below the 50% level, rise. Another dip down below the 50% level, rise. Another dip down right to the 70% level, almost a perfect touch to that line, rise, okay? So as you're seeing this, you're seeing higher lows being created, the Fibonacci being respected every single time. This gives us confirmation that we are still in a bullish trend, okay? If I were trying to do this in a range, it would be harder to align these areas, and I would be making up, you know, a couple of different reasons why the Fibonacci may work. Fibonacci's in ranges do not work as well as in bullish trends, okay? So as we learned, we can use the Fibonacci to try to catch some of these retracements in the golden pockets, in the golden zones. What these also aligned with were imbalances in price, right? So you see this imbalance here, right here in this area. Let me just draw this over a little bit, okay? So this imbalance here between this candle and this candle, look at where that wick ends and look at where price came to this morning. Same exact area, guys, all right? Price had already filled the imbalance. All it was doing was coming to snatch these lows. All right, so these are the patterns that you can pick up in price to take advantage of it. So the play this morning, once you saw liquidity get grabbed from the upside to take these highs out, okay, short. And this is what it delivered, okay? Now, the short-term play was short. We said yesterday, all of the power is going to be from the bottom sides. Whenever you get these drops, the next expectation is when liquidity is grabbed, price should turn right back around. And that's what it did. Liquidity ran to the bottom side, push. Rocket fuel from the top, rocket fuel from the bottom. The market is liquid. It's still going to keep pushing higher. Now we are in previous imbalance zones that trace way back in time, right? But you can see when price comes back to these areas, guys, it sort of sits still, consolidates. It elevates, consolidates. Remember that, okay? Price can only move one of three different ways, up, down, or sideways. And it doesn't just move up to down, up to down. You always have consolidations after major pushes, okay? So remember that. Just like it did it here, okay? So this is what we're looking at when it comes to price on the 1 hour chart. If I am giving any opportunities for shorts, they're going to be very short term, okay? Any grabs of liquidity, we can take that opportunity to try to go short, but you're going to be fighting in that trade against institutions who want to go long. Your better plays are liquidity grabs to the bottom side. Wait for the ranges to get set. Wait for price to show you what it wants to take out, okay? And then once it takes it out, you just go for the ride. This is the way that we trade. This is the way that we're able to continue to keep a winning percentage. You know, this is the way that we're able to do this, guys. All right. We're just going to flash this, and it's not to brag, but these are the rules that we follow. And we're trying to show you guys the same rules so that you can apply them as well, start to learn them, and take this to the charts so that you can also win. All right. So that's what we're seeing on the 1 hour chart. Let's go ahead and cut through the HODL opportunities fairly quickly, and then we'll go ahead and get up out of here for the day. Taking a look at our HODL positions here, we always like to preface this with this is not financial advice. This is the way that we are viewing the market, scaling into position, scaling out of position at certain areas in price based on price action trading techniques, concepts of liquidity and imbalance. Okay, so same thing that applies to the lower time frames we use on the higher time frames because price is fractal. Whatever you see on the higher time frames, you will see a microcosm of that on lower time frames. So the same rules apply on both. Okay, and it's funny how these rules work themselves out no matter which time frame you're working on. This is how price moves. This is how the algorithm prints. All right, so taking a look at this here, our scale out positions is where we're taking profits. Doesn't have to be full profits, but some is recommended at these areas, and scale in areas are where we actually go in. Okay, so scaling in doesn't mean dropping your full bag. It means a little bit at a time. Once price plays around in these areas, we are accumulating. Okay, we also have larger areas identified of discount, bargain, low premium, high premium. Essentially, we're trying to buy in discount, sell in premium. Okay, so with all of those rules laid out, we're going to take a look at each altcoin very quickly to show you how these scale in, scale out levels are being hit, where the discount areas are now being traded in low premium zones. So you had your opportunities to get in when price was in a discount, right? Now it's elevated some. You don't have buying opportunities on all of these coins right now in our perspective. So we're going to cut through all of these fairly quickly so that everybody can get an idea of where these levels are. And hopefully it'll start to sink in a little bit as we do this every day. All right. So when it comes down to Bitcoin, we are currently trading in a low premium zone at 45,176, down a little bit from today's push higher. But as you can see, if you scaled in right at these areas where we were saying at around 34, 32, you did take some nice profit here today. This right here is a, let's say you got in at 34, okay? And you took your profit here. This is a 34% move, okay, for Bitcoin. These are not light moves, folks. So don't look at these areas, even if they're close together, as small percentage gains. These are 30, 40, 50% gains in price. And as long as you're playing it from discount to low premium, from bargain to low premium, you are seeing massive gains on these moves, okay? This is why it's a long-term HODL perspective that we're playing. So again, Bitcoin, scale in, scale out positions being honored. Right now, trading in a low premium zone. We see Bitcoin anywhere under 39K. It is a buy for us. Even better buys are around 34, 32. Looking to scale out at 45, 50, 55 in those areas, okay? And again, we do HODL Bitcoin. We are not necessarily selling Bitcoin, but it's okay to take some profits if in fact you did make some and, you know, use that for something else. This is the way that you can move things back and forth with cryptocurrency, maybe put it on a coin that's moving a lot faster and a lot more aggressive, and then take that profit, put it back into Bitcoin. This is the way that you continue to grow your stack. All right, let's take a look at Ethereum. Also trading in a low premium zone, currently right now at 3168. We think Ethereum will continue to push higher. And again, you see the scale in to scale out levels represented and hit. All right, so price comes back down. We're anticipating sort of a retracement, maybe back down to this imbalance zone, and then another push higher to touch another scale out zone. Anywhere under 2536 is a buy for Ethereum. If it does come down to 2401, we will definitely be looking to scale in at lower levels at that point if in fact price does dip there. Okay. Now, when it comes to the FOMC, this is when we're really thinking that prices may revisit some of these levels. But once the market cools off a bit from the reaction, you'll start to see higher prices again. This is what we're anticipating and looking for. When it comes to XRP, XRP is in a discount zone right now, scaling levels being hit. And as you can see, price is coming down a bit off of the second scaling level, but these are again areas to accumulate. Right now, anything under $1.04 for us for XRP is a good buy when it comes to this, okay? Even better scale in positions are at 86 cents, 65 cents. First scale out position, we're looking at $1.28. After that, $1.65 for XRP. Moving on to Cardano, currently trading right now in a discount zone as well, $1.17. So Cardano has had some fairly nice pushes over the course of the past few days, but nothing impressive enough to make me really say that I'm gung-ho and gangbusters about Cardano. As you can see, lots of negative price action. Had some bad news over the past few days, right? They released their swap. Things aren't going the way that I think they anticipated for it to go, even though there's been some improvements. So Cardano facing a lot of pressure right now, right? A lot of people are looking for this to explode. But right now, price action isn't showing me this. When price action does not give me confidence, right, then we're not necessarily keen on taking longs or accumulating in these areas, right? Right now at a discount, I think price can break into a low premium. You know, Cardano is a strong coin that we do believe in. But right now, I think that they have to get over developer problems. You know, there's a lot of things going on right now when it comes to Cardano and just building on that ecosystem. So this is why you may be seeing sort of a more depressed price action, more of a ranged price action, according to what things like Bitcoin are doing. Okay, so moving on, let's talk about Solana. Also in the discount zone. And again, these are perfect areas to scale in, right? These little accumulation zones, you're going to see this. Price go down, price go up, price go down, price go up. Sort of snake its way around within these areas. But again, we're still in a discount. Scaling in anywhere around 113 to 100 bucks, maybe 88 bucks for Solana is a good play. Anytime you break over 133, start to think about scaling out. Our first scale out zone will be 164, then 194. Okay, so pretty confident that Solana will hit these marks as well, which is why we're scaling into positions here. When it comes to AVAX, also discount zone, scale out zone hit. But AVAX is showing so much strength that it might hit this second scale out zone. Okay, so say for example, we got in here, we'll take 20% here. We'll take 20% here. We'll let the rest ride. As long as we're getting this very hard and aggressive push to the top side, we have confidence that price will continue to move this way. Now, it will retrace at some point. Will it come back down to a discount zone? Don't think so, okay? This is moving very nicely into this low premium zone. So getting in at the scale in positions of around $59, getting out at $90 and above, these are good trades to take, folks. Very good trades to take, especially from a long-term HODL perspective. You're not selling it all. Remember, you're just putting more dry powder on the side so that you can buy into more things if in fact you do see opportunities. Let's take a look at Atom, currently in a low premium zone. Scale in to scale out levels getting hit. So we did take some profits on this. Price is starting to trace back down, but you do see we have support, right? Lots of wicks from the bottom side. We're anticipating that price will probably push up. Now this scale out zone did create some resistance as well, right? Anticipated. But we think that you do have enough power in this market to continue to propel Cosmos. If you take a look at the longer perspective in regards to price action, things have been moving up here, right? So right now in a low premium zone at $29.92, we think anything under $23 is a good buy for Cosmos. Let's talk about Polkadot, also in the discounted zone right now at $21.13. Also scaling in, right? Very similar to what we saw with things like Solana, okay? So sort of ricocheting around right in these scale-in zones. And again, anything in the discount zone we think is a positive buy, because if you take a look at the previous price action, you do have some pretty nice pushes to the top side for DOT, all right? I think this community in this ecosystem definitely has a lot more room to grow. And right now at $21 is a pretty good buy for Polkadot. So that's what we're scaling in, right in these levels around $20, $17, $27. Scaling out starting at around $32 and higher. All right, let's talk about MATIC. MATIC also in a low premium zone. You see, scale in zone gets hit, scale out zone gets hit, price accumulates. Pretty good price action. This is the type of stuff that we want to see. Right now, MATIC trading in a low premium zone right now, $1.92. So scale in levels again are around $1.45, a little bit below that. Scale out positions are going to be at around $1.95 or higher. Okay, so this is the zone that we're in right now. We're anticipating that MATIC will continue to climb. As you can see, it's been on an uptrend. This is a pretty nice retracement, but nice rebound from that retracement as well. All right, let's talk about Luna. Luna also low premium zone. Seems like it's trying to break its way into a discount zone, and based on the previous price action, if it does, anything under $53 is a pretty good buy when it comes to Terra Luna. Okay. Also, we have some scale in zones getting hit here, scale in to scale out. And if you were to take a ruler again, guys, see how close these are together? But if you really line them up, that's a 32% move. Okay. So these are not small areas in price action and movement. These are very nice plays where you're seeing 30% gains in a matter of a week. All right. It's just about being disciplined enough to get in and get out and put that dry powder on the side while you let the rest play. All right, so right now, Luna currently at 54.93. Scale out position was hit at 57. Our next one up is 76. Our next scale in position is somewhere around 43.56 when it comes to Luna. Taking a look at Harmony One, also in the low premium zone, trading at 21 cents. We think good scale in positions for Harmony One are around 17 cents and 14 cents. Really anywhere in the discount zone, because as you can see, still more bullish price action. Okay, look at the previous price action. Base your decisions on that when it comes to these areas, okay? Not every scale in zone is a good scale in zone, especially if the price has been falling like a rock for the past year. You want to pay attention to these things as well, all right? It's not just about where your zones are. It's about where the opportunity is in relation to what else is happening in the market. So scale out zones, we're anticipating that Harmony One will go for these, okay? It's already in the low premium, seems to be getting held up here. Again, the market is bullish. Even though you're down 3% today, you do still have higher lows being set. All right, so these are things that we'd like to continue to see when it comes to Harmony One. Secret token having a pretty gangbusters day. Did come down a bit from when we started to record this, but also discount to low premium, right, guys? As long as you're setting up this zone, you're able to take profits here. If you were to buy in the discount, and let's say you got in this candle, okay, and you come up to a low premium, let's say you took profits today, that's still 34%, guys. This is what we're saying when it comes to this strategy and this process. There's more that you would have to learn, especially about how to draw these levels. And this is why I think this tutorial is going to be very important. We'll be able to point to the tutorial, not have to explain this all the time and just call these levels out, which will make the video shorter. So we're going to look to get that done this weekend, but we're going to show you this over and over and over again in the market so that you can see that this actually works. and that people can use this to their advantage if you're playing the long-term hodl game and you're not, you know, a trader on leverage like us degenerates, as I said before. But anyway, back to Secret. Currently right now trading at $6.86 in a low premium zone, reaching for that scale out level. And again, if you were buying in discount up to low premium, you are seeing positive gains on these moves. Let's talk about Fantom. Also low premium zone, currently trading right now at $2.15. If Fantom were to drop anywhere into the discount zone based on previous price action, we think that these are good buys. Okay, so scaling in somewhere around $1.70, $1.50, but really anywhere under $1.80 is a good scaling zone for Fantom. Looking to take profit somewhere around $2.25, $2.68. All right, so these are our levels for Fantom. Let's talk about Algorand, also in a discounted zone, and we are in position for Algorand. Okay, scaling into these areas here, and right now at between 106 to 94, these are really good areas to scale in. Again, right, small area of a consolidation. Again, you have a small area of consolidation. Things are moving sideways, very similar to what Solana's doing. So we're anticipating for price to break out of these areas, right? Not a lot of imbalance to the downside for price to catch if we're looking at this from a price action trading perspective. So if it were to come here, bounce back up, these are the things that we're looking for. You have imbalances to the top side. So right now for Algorand, scaling in at the current price is around $1, okay? Scaling out somewhere around, let's say $1.55, $1.67, 202 are the levels that we're looking to start to take profits. All right, when it comes to Doge, this is the price action that we don't want to see, right? Just down, just down. It doesn't jump from discount areas to low premium areas, okay? The more you scale this out, the better you're able to see that this is being suppressed. And so if price were to come down to these bargain zones, okay, based on this previous price action, we're not taking a big bag in Doge. We're not taking a large shot in Doge, okay? We're taking $10, $20. Like, we're not going to put a lot into this. And the reason why is because it can definitely go from 9 cents to 7 cents, and from 7 cents to 5, and from 5 to 3. It really depends on how fast the Doge community capitulates. Shiba's in the news right now. It has competition. Okay, guys? So something to watch for Dogecoin is whether or not it can start to bounce back from these supremely low levels. If it's not able to do that, you can start to expect more capitulation in the meme coin, which is known as Doge. Let's move forward to Loopring. Loopring also, the negative price action is not giving me enough confidence to buy at these scale in levels. So you see the difference. Positive price action, price comes back to a scale in area, we're in there, okay? Negative price action, prices in scale in areas, not so much. We're just going to wait and see, okay? And don't get mad if you miss the explosive move because you're playing it safe. You are making sure that your capital is there. Now, if price pushes up again and starts to come back down into discount zones, that's when you're able to take your opportunities, okay? Never feel like you're missing anything in the market. The market isn't going anywhere. It's not like you're going to wake up tomorrow and say, man, the market disappeared. No more opportunity to trade. The market's always going to be here. To the day you're gone, it's going to be here, okay? So never think that the market is running away from you or the market is not offering you enough opportunities. You just have to be patient and it will show you itself every single time. All right, let's take a look at where Loopring is trading currently at 103. But if we were to scale in, it'll be somewhere around 64 to 44 cents. First scale out position would be 223. Not firmly confident that price would reach that, but it is a good trade if you were to get that. When it comes to Enjin token, also sort of a higher level between distance in regards to where the scale-in positions are, but this again looks very similar to microcosm of what's happening on Solana, right? So up moves and down moves within the scale-in positions here. Okay, so good areas of accumulation in discount zones. I'm pretty sure Enjin's going to push right back into this low premium zone over over $2.50. Sorry about that. And this is what's going to happen for Enjin. I think Metaverse still has a lot of steam, a lot of room left to go in regards to growth. When it comes to Mana, bit more aggressive coming out of the discount zone into the low premium zone. Okay, so this is an example of one that went from discount to premium. If you did take some profits, you lock those in, you're not affected by this down move. Okay, so even though we didn't hit the scale out level, if you're still following the discount to premium zone rules, you'll take some profits, and that's what this is really all about. Okay, so price did jump from a discount to a premium, currently trading right now at $3.22. Our next scale out level is somewhere around 370. Price shot for it, but couldn't quite reach it. But that's no big deal for us because we are still anticipating the bulls to have control of this market. When it comes to Sandbox, though, Sandbox actually did complete the move, right? So scaling position hit, scale out position hit, price comes right back down, discount to premium. We're going to show you this over and over and over again, guys. If this doesn't prove to you that this works, it's all about where you're setting your levels, okay? And we're going to show you how to set these levels so that you can take these things home with you as well, all right? And be able to set this up for yourself. But scale in position was hit at 283. Scale out was hit at 475. Price is currently trading right now at $4.50. Trying to get its way back into a discount zone, but I think you're going to start to find some support here. So anytime that SAM would dip maybe under $4.42 seems like a fairly good buy when it comes to SAM. All right, last couple of coins, Chainlink and Curve DAO. For Chainlink, currently in a discount zone, very similar around these scaling levels, right? So up, down, okay? Accumulation, this is what we're looking at. So we're anticipating that this will continue to push higher. We even have a scaling level at the top side of the discount zone because we think that when Chainlink pushes, it's probably going to push very strong. We have seen it go from bargain zones to high premium zones in a matter of not that much time, right? It's maybe about half a year. What is this? December, January to May. That's when this happened, okay? So you can have very aggressive pushes out of these zones, which is why we would scale in a bit higher, okay? Also, your scale out levels are starting to come in somewhere around 32 to 34 bucks. But again, anything under $27 is a good buy for us when it comes to Chainlink. But the scaling positions right now are around 17 are the ones that's being hit. So we are accumulating. When it comes down to CRV, also in the discounted zone, did push up from a scale in, touched the low premium zone. So to me, not really an area to take profit. I want to hold on to this trade if I scaled in here, right? I want to wait and see because I know that CRV will jump out of these areas, okay? It comes from low premium, bargain discount, okay? And it jumps into these areas relatively quickly. We see the previous price action. Things seem to still be on an uptrend, so we will continue to ride this. We still think that the steam is coming from the bottom side of the market, okay? Which means that we're going bullish. So these are all of the coins that we're currently tracking. We're trying to shorten the list down a little bit more. We understand that this does drag the video out some, but I think that just having these HODL perspectives and how to draw this up on a chart, once you know how to do this, you can do this on any coin that you're tracking, okay? Now, the word of advice and the thing that we want people to understand is that this may not work and probably won't work on every single coin. Some of these coins swing in ranges that are just a bit too wild and too big, okay, for you to really get a real perspective. But for something that, say, has been around for 6 years, 7 years in regards to a crypto, all right, maybe a little shorter, maybe around 4 years, you have enough price action there for you to draw a range, you know, based on the last, say, 2 years of price action and get a real good gauge on where discounts and premiums are in current price action. All right, so we'll continue to show you how to do this, and hopefully this will give you guys more insight on how to draw this up for yourselves, and then eventually you'll be able to draw this up for any coin that you're tracking. All right, so more tutorials coming soon. This is it in regards to what we're going to track for the market. So before the video gets too long, again, we want to say salute. Thanks to all the new subscribers. We will continue to bring this content out every day. We will continue to educate you guys on how we do this type of stuff, because, you know, it translates into wins in our portfolio. And if we can help you guys do that as well, then we've achieved our objective when it comes to showing you this market. All right, so it's for Maestro, salute. Thanks to all of the folks who tuned in. We will be back tomorrow with more info on how to trade this market. Just the long and short. We out of here.